All righty, welcome everyone. Welcome to the Hurley Investments Market View Commentary for the 9th of September. I have a couple things that I think might be important for today and something that I think is going to be helpful for all those that'll spend their time watching this and watching the recording, all you that are here today. As we've gone over the last week, we've had 2 or 3 days where we ran on a down day in the market, right? Down negative 0.34. We were up 152. And again, it's just Apple finally catching up. Disney, Baidu, Facebook, Bank of America, Visa. I mean, it's kind of our core holdings that are moving better. So I'm just thinking out loud here. If we've had that 3 times in a row, one of my premises is if I can get it out here, I'm grateful to have a methodology that allows me to wait for fundamentally underpriced stocks to rebound. And I think that's huge. Instead of just guessing, instead of just following the crowd, I'm grateful to have a methodology that allows me to wait for fundamentally underpriced stocks to rebound, for the market to catch up, for the market to get it, for the market to be on the same page that my research was. I found it interesting. A couple analysts came out and the Gorilla Trades guy came out with, hey, you can make a mathematical expectation for Apple to be between $181 and $215. And I kind of giggled because obviously my research, and what I've told you, is it's kind of like 185 to 203. And much like I showed you with Baidu a couple weeks ago, you're just picking a forward earnings and multiplying it times a reasonable multiple. I think we used 34 or 36 on Apple instead of the 28 or 27 that it was at. And we came up with a number. So it's not rocket science, right? But all of a sudden, people are starting to jump on the Apple bandwagon. Not to mention, they're the only one that might have the chips for a lot of the electronics for the phones. So we seem to be in a really good position for, well, we're in a great position for Apple. The second thing is I'm grateful, right? Can you see where I'm going with this? For a methodology that allows me to actively do something other than wait while bearish markets or bearish trends are occurring, right? What we do by collar trading, what we do by protective putting, using insurance, we have something that actively can make up money on the way down to convert to more shares of stock for the bounce higher down the road. As you guys all heard my story and the sale of the business and having money in a trust Man, I hate being told to just wait. It makes no sense for me to be paying someone to manage money to have them put me in a mutual fund or a group of stocks he's going to get a commission on, and to be told when things go down, just wait it out. I expect him to do something more. If I'm going to be paying him and he gets his commission, and they're going to make at least 3% on me and charge me anywhere from 5 to 9% when it's all said and done, dang it. For those kind of fees, they better be working magic, because I am not interested in being told, well, don't worry, it's going to come back. That doesn't work for me. I want them actively to be earning the fees that I'm being charged. Pretty interesting as we go back to what's moving. Apple, Disney, Baidu, Facebook, Bank of America, Visa. Apple, let's take a quick peek at just some pricing, right? Apple's at 156.67. If on the low side, we're at $89, $185, excuse me. On the low side, we still have $29 to the upside, or roughly 20%. Bank of America, it's already run. It's one of the top performers in the banking industry. We chose very well in being in Bank of America. I know it was trading upwards at 60 on the 2008 crash. I don't know what their earnings right now, if I can make a justification for $60 or a price target that's close to it. I am kind of curious. What about let's take a quick peek at where maybe some earnings prices that are at. 40, 42. Yeah, it's pretty fully priced right now. There's not really a I'm not sure how much higher we're going to see Bank of America, but boy, it ran this year from gotta get my glasses on, 30 up to 41. That's a 35% increase. I think we're doing really good on Bank of America. Baidu as high as 380, trading at 166. We've got $214 to the upside on Baidu. Huge opportunity. Disney sitting at 184, has been as high as what, 205. Mathematically, you can make a justification for that 297, 300 range. And it's just giving it a correct valuation on its movie business. Ford to 1295, 1750 to the upside, which is $4.50, a 35% increase there. JP Morgan is also fully valued. Where else do we have? JP Morgan, Under Armour, $22.64, $42 to the upside there. I think it's 36 to 42. So if we go 36, we've got more than a 50% increase here. And in all honesty, Visa trading at 226 has about a 10% upside to 250. We're sitting good. We're sitting in positions with significant upside, and our methodology, even if it means we're going to have to wait till the end of the year to make our money, so to speak, to catch up to the market. We did really good last year, almost doubling the market. We're going to be in good shape. We just need to keep doing what we're doing so that when things rebound, we've added more shares, we're in a better position to make more money on the way up. I loved the last week. 3 times the market was down by 0.2% or more, and we were up 0.8 or higher. That's what I like to see. Kevin, why do you like to see that? And of course, it's not because, duh, more money, right? Better returns. In all honesty, it's because it validates all the work done previously before we entered those positions. It validates all the work that we spent running calculations, all the hours Keeve and I look at what if, try to find scenarios why things aren't going to work, try to understand COVID, chip shortage. We spend hours trying to pile through data to see if we made a mistake. Kevin, I can't believe you're in Boeing. I know, it's awful. How awful it is to have some people in Boeing and some stock replacement strategies in a company that went through a horrific lawsuit problem that's trading at 214, that lost, when it's killing people by the hundreds, it lost 8%, 8 to 9% of its total book of business. And that 8 to 9%, 4.5, 4.8 of it turned into a more profitable, higher margin opportunity for the company. But Kevin, how could you invest in a company that's out there killing people like that? Well, it's not Philip Morris, it's not cigarettes. It's some foreign pilots that weren't trained enough because they didn't speak English. They didn't understand the flight simulator training. I don't know, I'm not a pilot. And I might just be making excuses. But fundamentally, I see a lot of reasons to be in Boeing. Facebook, Kevin, why do you got a bunch of people in Facebook? It also is somewhat fully valued. Well, I'm in it because we had an opportunity to get to 400. I'm in it because we collar traded it twice on the drop and made up some money on the way down. We're going to add $400 October covered calls here shortly, so we can make sure that we can go ahead and get some credit while we wait through historically what is a downturn in the market. But what if you get called out? Well, again, this year I think is the year to take profits. If we get called out on Facebook, cost basis is at 308.32. When we take the profits from the puts and the short calls, our cost basis is down around 292. We sell at 400, 405 at 292, make $110 to $119 a share on a 295 cost basis, paying taxes hopefully this year on a lower year taxes. We're going to book a 40% return. For most people that are in groups of 300 shares, 300 times $119, we're talking about $35,700 roughly to the penny, right? $35,000 for a 9 to 11 month wait in Facebook. I like it. I really like it. for like an $82,000 investment to pull in 35. I guess it's a $92,000 investment to pull in 35. I'm all in. It's what I like to see. In the last 3 weeks, I hate to say this, the last 3 weeks has given me hope that we will beat this year's, can't type still, this year's S&P 500. We're right where we need to be. Today, I actually brought in the big picture from briefing.com. I wanted to talk about having a big picture, looking at things a little bit differently. Our August employment report was so bad. It was a third of what was expected. And because of that, Jerome Powell can't raise rates. He probably can't even start to taper the housing bond. Not going to happen. We are now to a point where the Fed is going to be on hold. And in all honesty, probably on hold for the year. It's great. It is really good to see how poorly our job numbers came in, so we can take the Fed out of the picture. Now, it talks about something interesting here. It talks about personal income has gone up. And personal income is rising significantly. Maybe it's in the market recap. Got the wrong market recap in here. Give me a second. The short answer is it said personal income is rising. And it's probably rising because maybe they don't have it in here today. It's probably rising because the people that are getting back to work are the higher paying jobs. You're not seeing the fast food. You're not seeing the bartenders, the servers. The lower paying jobs are not coming back. The people are still using their brains and running their calculations and saying, hey, it's better that I don't work because I get paid so much by the government right now. I'm kind of excited because next week I'm not worried about the FOMC meeting. I'm not worried that we have huge inflation running on the dollar because I can justify, hey, the people that are getting back to work aren't the bottom feeders, so to speak. They're not the ones that are making between $30,000 and $42,000 a year. The ones that are coming back to work are making significantly more than that, which is increasing personal income. I found it pretty important to go through and get that study and that read, because once again, it gives us the opportunity to have the Fed out of the picture and not get a, hey, we're going to get a bunch more cutting back, taking the Kool-Aid off the table. Bond repurchasing are going to go down. Interest rate hikes are going to go up. All that's off the table right now because we're not where we need to be as a whole in a country. All right, Dow still slightly bearish. You can see it's kind of funny. I said the last couple of weeks, probably right here, just crossed below, and those are most likely the 3 days that we're up 8 tenths or more on our portfolios. Good places to be. I like that it's touching the 50-day because I would expect for the next week or so, week and a half, probably will have a bounce higher. If not, we may get that bounce lower. I'm okay with that because we have our pivot point, our support, not too far below, which I think means we'll be in good shape. We might see something even like this. Day below the pivot point, a day below it, above it, day below, a day above it. Past history says we look okay on the Dow Jones Industrial Average, even though technically we're bearish. If we analyze the S&P, a little bit different. In fact, probably my 3 bounces are the bounce lower, and today the bounce lower off of being overbought. Those bounces to the downside have been my up days where things are looking pretty darn good. We are bullish on the S&P right now. And then let's go check out the NASDAQ. A little bit of a rough day today. It's done it a couple times. It's overbought, needs a couple sell-off days. I like where we've been at. Pretty interesting though. NASDAQ is still bullish, so we look to be in pretty good shape. All right, what am I going to next? Make sure I have bullish there. Not much is happening. GameStop Lululemon on Wednesday. Outdoor Brands, the part of the Smith & Wesson that broke off, is on Thursday. Kroger on Friday. No real economic reports. Obviously, consumer confidence will run futures on Wednesday. Initial claims on Thursday, and PPI inflation will run our markets on Friday, our futures. Internationally, I don't have it in here, but there is a European economic meeting that's happening, probably the ECB. I should take a quick check, but the ECB meeting will most likely run our futures the day that they had their meeting. I should have had it in here. Give me a quick second. That's kind of made a mistake. I should have known that already. Should have put it in. Shoulda, woulda, couldas, right? Tuesday through September. There we go. Canada, Bank of England monetary policy. Thursday, China inflation. There it is. ECB. So it's Thursday. The ECB monetary policy decision statement comes out. Thursday morning, our futures will most likely be run by that, as well as our initial claims for the week. All right. So I should put in here ECB rate decision. That'll be a big one. All right, what else do I have for you? Interesting article on SPACs, that SPACs are basically running out of steam. And not only that, but they're losing people money. Please go ahead and take some understanding here. Most of the SPACs are $10 price units. Worst performing are down to $3, so nothing like losing 70% of your investment. And these investments really run, small positions run $100,000 to $250,000. If you've ever thought of being in a SPAC, or you're looking at Reddit, this trendy rushing in, rushing out, please read that article. It's pretty important. Tech giants are rushing to develop their own chips. Here's why. Pretty interesting, just to get an understanding of what the lack of supply and the fact that the United States has gone down from making 33 to 35% of the software chips down to 7 to 11%. Great article. If you want to understand how important chips are, here's one to read to understand why the chips are so important for technology. I just have the link. So really, if you want to see which states you can get the most from Biden's infrastructure bill, if it goes through, make sure you click on that one. I think I shut it, unfortunately. So make sure you click on this one. Pretty self-explanatory, though. We always know California is going to be the one that gets the most. Great article. Go through and read through all of it. It's changed a little bit, though. Where is it? There we go. I go show more states. California is going to get 44 billion, Texas 35 billion, New York 26 billion, Florida 19, Illinois 17, Pennsylvania 17. I'm just going to make a comment. California is bankrupt, New York is close to bankrupt, Illinois is bankrupt, Pennsylvania is bankrupt, New Jersey's bankrupt, Ohio's bankrupt. I'm a little shocked at where this money is going with some of the poorly run states, and the fact that a lot of the money is going to bankrupt states. With that said, I pulled up Utah just to see what I could get out of it. Utah is only going to get 3.96 billion. If I go buy that property up in Idaho, it's only going to get 3.03 billion. I don't know if they need it or not, so I'm not probably a good place to say something. But highways, bridges, public transportation, water, I need to go back and shorten it again. Show less and other. Do make sure you go through, take a look at your state, enjoy reading the article, but you have to click on it, go to the full state list to see what your state might get and where the money in theory is going to be sent to. All right, what do we have next here? Last article. Ford poaches top executive Doug Field, who helped him lead Apple's top secret car project. He also worked for Tesla. Kind of neat to see an automobile company poach technology talent. I absolutely love it. With that said, what questions do you guys have? I know I'm going a little quick today. What questions do you guys have that I could possibly answer for you? So a couple people asked it, what is your P&L on, so Ida, for Lockheed Martin, that primarily fits with one individual, and I basically have taken over positions there, and I don't think I've got, I would have to calculate that one. I hold it in someone's folder, but I don't have the profit and loss on Lockheed Martin. The cost basis I don't think is quite accurate. And in all honesty, some of the time that I've held it has been before it was at $258.46. It was significantly higher, in fact, probably closer to the 320 range. So So price target on Lockheed Martin, though, probably closer to 465 is where you can make a justifiable price target for Lockheed Martin. And it's interesting, if you ever want to kind of check, just to do a little bit of research, head off to FinViz and just take a quick peek where you might see some of the numbers. 509, 410, 435, 384, 370, 400. I come out with about 465. And all I'm doing is taking the forward PE numbers, which are actually down, and giving it a reasonable PE ratio or valuation for the industry. They're going to say the earnings per share is at around 25. Again, I'd probably make it closer to 39. And that's how I come up with where I'm at for Lockheed Martin. But profit and loss looks pretty good on Lockheed Martin. I wish I could take full credit for it, but I can't. Brought over by another individual. And I have not had it since 258. It's been higher than that when I received it. Any other questions? If not, I appreciate you guys being with me. I'm going to post this tomorrow to see if Briefing can get their new information up on last week. I don't see any new questions coming in. Guys, have a wonderful evening. I appreciate you guys being here. We'll see you on Thursday morning. Take care. Have a wonderful day, and I will talk with you then. Bye-bye.